Hello everyone, Duncan Welch here, CPA and founder of Duncan Financial Solutions. Today we're talking about one of the most overlooked but powerful strategies for business owners, tax advantage retirement planning. This isn't just about saving for retirement someday, it's about using the tax code smartly to reduce your taxes today while building long-term wealth for tomorrow. Stick with me and I'll show you real numbers of how contractors I work with have saved tens of thousands of dollars each year. Here's why this matters for your business. First, lower taxes today. Retirement contributions reduce your taxable income immediately. Second, grow wealth for tomorrow. Your contributions compound tax-free or tax-deferred. Third, secure your long-term future. You'll be building a financial foundation that supports you long after the jobs are done. This isn't just theory. These strategies are in the tax code specifically to encourage you and business owners like you to plan ahead. Now let's break down the major retirement accounts available, their contribution limits, the extra catch-ups if you're age 50 or older, and whether they require employer contributions. 401k, $23,000 contribution limit. If you're 50 or older, you can add an additional $7,500 for a total of $30,500. Employers often offer a match, but it's optional. Roth IRA or a traditional IRA, $7,000 limit plus a $1,000 catch-up if you're age 50 or older. So $8,000 total with no employer contribution required. SEP IRA. You can contribute up to 25% of income capped at $69,000. No catch-ups here, but contributions are 100% employer funded, meaning if you have employees, you must also contribute the same percentage for them. Solo 401k. For self-employed owners with no employees except a spouse, employee contribution is $23,000 plus $7,500 if you're age 50 or older. On top of that, as the employer, you can add up to 25% of income. Total cap is $76,500 if you're 50 or older. Employer contribution is required, but since you're both employee and employer, you're essentially paying yourself twice. This slide really shows you the full landscape, how much you can put away and what obligations come with it. Now let's see the tax savings in action. Suppose your business nets $250,000. If you put $50,000 into a SEP IRA, your taxable income drops to $200,000. At a 35% bracket, that means $17,500 less in taxes this year. And that $50,000 doesn't just sit there. Invested at 7% growth, it could grow to about $193,000 in 20 years, tax deferred. That's the power of these accounts. Another approach is balance. You don't have to choose between short-term and long-term benefits. For example, you could contribute $50,000 to a SEP IRA for an immediate tax deduction and contribute $7,000 to a Roth IRA for tax-free withdrawals later. That way you could get best of both worlds, savings today and tax-free income in retirement. Here's a quick case study. A 50-year-old contractor with $150,000 in income sets up a solo 401k. Employee contribution $23,000 plus $7,500 catch-up equals $30,500. Employer contribution of $37,500 is a total of $68,000 into retirement. At a 32% tax bracket, that's $21,760 saved in taxes this year. That's real money staying in the business instead of going to the IRS. So here's the bottom line. Retirement planning is not just about your future. It's about cutting taxes today while building long-term wealth. If you want to see exactly how much you can save, schedule your complimentary profit and tax strategy analysis with me. We'll run your numbers, compare options, and design a retirement plan that maximizes your savings and supports your goals. Let's make sure you keep more of what you build. Thank you.